Today's number, guys, is 200 because we don't see this very often. The top insiders, yes, you guessed it, every one of those transactions was actually a sell. And this comes off the back of a market that's done almost nothing since October of 2025. So what exactly is going on? Well, in today's special weekend edition, we'll take a look at what Jim Cramer has to say about the big moves in Bitcoin and why silver, gold, and many other metals hit potential capitulation levels as we see options dark pool activity start to rise back up. Yes, it's a different market than it was last year, and we're seeing totally different stocks moving. So which ones do you need to watch? Where do you need to be concerned? And of course, where are the opportunities? Join us as we cover stocks, commodities, and cryptos in a weekend video that's not to be missed. See you very soon, guys. There's a lot to discuss. Well, welcome back, everybody, to the special weekend edition of The Daily Show. My name's Thomas Atkinson, and today we're discussing what Wall Street's up to, the macro flow, and of course, what is going on with those options transactions. Some monsters coming through that could have significant impacts whether you're a trader or investor right now. But I thought we'd start off by discussing the big story right at this moment, which is, of course, what are the biggest traders in the world actually doing? More importantly, though, what are the insiders doing? So we'll start with the insiders, and No Limit here over on X has posted that insider transactions, the top 200 of the last week, were all short. That's right, they were all sells, and every single person, it looks like, wants to get out of the US stock market at current valuations, at least when it comes to directors, officers, and everything else. Now, why is this important? Well, it's not the first time we've seen this on the channel, and last time we found 197 of those 200 transactions were actually sells back in 2025. So is it really a surprise? No, it's more of the same, but what it does tell us is that we could be in late cycle investing. That is a market that is broadening, a market that is looking at different areas than just, of course, the big tech, and maybe even a market that's starting to show weakness that's going to need support from the Federal Reserve throughout this midterm year. What does that give us, guys? It gives us a cocktail for tons of volatility and, of course, a lot of opportunity for all of us out there. So we can see it two ways: bad, glass half empty, or maybe glass half full. Let's start off, though, with the scary stuff, then we'll go through the good stuff. And, of course, we'll go through our summary after that. First up, jobs openings per unemployed worker. Now, that was at a Goldilocks zone post-COVID, and we can see we went from 0.2 all the way up to 2 when it comes to how many jobs were available. Almost unbelievable to see where we were in the jobs market in 2022 throughout the world, but that has come back down to, I guess you would say, more of a normalization level. And I think it's important whenever you're looking at these charts, this one here from the Kobayashi letter, I think over on X or advisorperspectives.com, you can see that generally speaking, around that kind of 0.7 to lower than 0.7 marker might be a concern in the markets. But really, we were coming off such a high level that it's expected to come back to the mean or median at some point. So is the jobs market weakening? Yes, but specifically it seems to be weakening when it comes to software engineers and, of course, certain industries where AI is starting to already have an impact. Now let's quickly talk about the big stories going around. One of them is, of course, from our favorite, Jim Cramer, who claims that potentially President Trump was buying Bitcoin for the US Strategic Reserve during the crash this week. And he says, I heard that at 60K, he's going to fill the Bitcoin reserve. Now, if this is true, it kind of could put a floor underneath the market. But actually, more importantly than that, we have an options floor that is starting to appear. So it is big news. Of course, it is something that has a lot of people discussing it over on X and over on other platforms. And of course here on YouTube, but realistically we need to be paying attention more to the actual real movements underneath the hood. And what that is showing us, according here to Duality Research, is that the market is broadening, but it is doing so in different sectors. Software tech this year, down 17%. Communication services, down 4.7%. The Magnificent Seven, yeah, you guessed it, actually negative. But when it comes to the S&P 500, we're actually up. And when it comes to hardware tech, semiconductors therefore, and energy sector, which has been one of our favorites, you're actually doing really well. And this year has shown, and pretty much I would say the last 4 to 5 months since the Federal Reserve cut in 2025, has shown that this market is abundance when you know what you're looking at. More particularly, that you're looking at things that are outside of tech. Here's a great visualization here of all of the good sectors this year that are outperforming the S&P, and you can kind of clearly see here that it is not all things equal. Technology, not so good. Energy, amazing. And this was the most hated sector when you think about it over the last kind of 2 years. So it makes sense. Everything catches up. And the most important thing to do is when you see these flows starting to appear on charts, that you recognize it. And of course, that's what we try to do here on the channel. So if you're new, make sure to sub and hit the bell icon for that, because we do it here every day. Now, let's talk about this in terms of real metrics. The weight of the 7 largest stocks in the S&P has skyrocketed in recent years. And we actually saw the Magnificent 10, let's call it, go into the stratosphere of around 37 to even upwards of almost 40% of the overall S&P, which means that if those stocks aren't going well, guess what? It's very difficult, even with a broadening market, for the index to do anything. And this means that we are not looking that much at the S&P this year, other than just general leadership, and instead we're looking at component correlations. That is, different areas starting to show themselves as potentially flow, and more importantly, whether we have a disjointed market. Now, you might think broadening pattern, fantastic, this is great, but actually when this type of thing does happen, it can sometimes be a bit of a warning sign. And it was last time a warning sign actually back in the late 2000s or the early 2000s, where we saw kind of the dot-com bubble come through and we had all of this breakdown in component correlation. So effectively, many stocks are pushing new highs while others are actually sinking to new lows. And that means that we don't have a buy everything market. We've instead got a buy certain things market. And that's exactly what's happened here at the back end of 25 into 26. Now, according to Sentiment Trader, you can kind of see here the S&P's 500's performance after seeing such correlations such as this can be subdued. And more importantly, it can actually also be the topping factor for some S&P 500 runs. So it's something we need to keep in mind during 2026, as this year is a midterm year, and we do expect volatility to continue to be high all the way into November. So where do we need to look at? Well, we always want to look here at something like Subu Trade's chart here, which is that we want to look at the put-call ratios, and we want to understand when the market is getting a little bit too negative. Now, in our previous video, we talked about how we started to see correlation across the board when it came to the S&P 500, when it came to gold, when it came to Nvidia, when it came to Tesla. Everything was kind of hitting a put wall. That is, it was hitting a zone where so many people turned bearish on the market that it's very difficult for the markets to go down. And if indeed they do, it creates what we call a waterfall effect, or basically a huge drop-off in the markets. Well, that's exactly what we didn't see. Of course, we ended up getting a bounce off there. And you can see here that when we have puts at this higher level, it often is synonymous with bottoming patterns on the markets. And you might say, how is that possible? We barely sold off and then all of a sudden the market's already going bullish. Well, just take a look here at the implied volatility rank. This one from Andrew Heisinger over on X. And you can see IV rank got crushed throughout the last session as we rallied through almost every single one of the markets. And what this often can do is it can be kind of a point of turning. Now, it's not always necessarily one, but you can see last time IV got crushed, and you can see over here in 2025, IV got crushed, and it does often bring with it the bulls. So it's an important factor to bring in alongside everything else that we'll be talking about in today's video. We also saw the same kind of thing happen here with the most important Bitcoin options. Basically, IBIT, Bitcoin's ETF, we saw put volume spike massively to 1.37 almost million, and we saw 284 million volume of shares. So a lot of activity often means there is both a buyer and a seller. Could this be actually the Bitcoin strategic reserve or something like that? Certainly all of this started to appear as IBIT got crushed, and of course Bitcoin broke down to that significant demand zone between 60 and 68K. So will that make sense to the data stats? Well, Blue Kurtic also had this in our last video. We discussed this point, which was that when Bitcoin capitulates, that is, it drops 3%, 3%, 3% multiple days after a row, often the recovery is actually pretty strong. And 5-day percentage change, 80% of the time the markets were up, and they were up pretty big. they were generally up about 10%. Now, funnily, it did 10% in a day, but it certainly does line up very well with this cross-correlation when it comes to the markets and everything we're seeing. It's the same kind of story when we look at XLP, which too many people started going negative on, and then all of a sudden the markets went off in the rally. And of course, IGV, which just suddenly got huge amounts of calls on it as it's been dropping off, with everyone trying to, of course, go against this trend and start to buy. And you'll often hear us say on this channel that we love going against, of course, the general opinion if the flows are going with us. But in this case, you'll see a very big delineation. Here, we have puts going up massively as the market rallies. Well, what am I going to do? I'm going to go with the flows, guys. I'm not going to go with this opinion. Here, the market's getting crushed. And what are people doing? They're all trying to buy calls. So in general, you'd be more negative than positive. Now, that being said, IGV has hit a massive support at this point, so we kind of expect correlation. But you get the idea. Just do what they're doing and then also bring the status stats together, especially if everyone starts going against that flow. It is an amazing trade or investment. It often can be a great tell. So we do have the data here from Wayne Whaley. I posted him over on X as well. You can follow us, FX Evolution, and links in the description down below. But basically, Wayne does a great job, especially at the start of the year, with all of his different data stats. And he's just compiled the latest one here, which is, of course, the toy box, which is pretty cool. And basically what it shows us is that 2025, because of that rally, managed to eke out a positive. And this is pretty strong because basically it means 46 times and only 3 times not, so that's pretty good stat odds, the next 12 months generally is positive for markets. And it's something that we'll probably bring up several times here on the channel. Obviously, we're looking at both sides because it is a midterm year, but for the bulls out there, that is a pretty strong read. For other people that are looking a little bit more negatively, we did get the 3 Hindenburg omens. I heard that we got 4, but I'll have to verify that. But basically, when you start to get this many Hindenburgs, it can mean that we're in for a bit of vol for the next couple of months. It doesn't usually mean a crash is coming though. And of course, one of the big data stats that we'll be watching this year is central bank liquidity. Because central bank liquidity has been expanding in the recent years, and that's helping, of course, the market stay afloat. With the new Fed chairman coming in, he's looking at potentially taking away our knowledge of what's going to happen in the future. Hey, I actually don't disagree with that one, but what do you guys think in the comments? It would be good not to get signposted all the time what the Fed's doing, but more importantly, he might actually be pulling some of the policy back. So basically, that could mean that we have less liquidity in markets. Again, creating opportunity, creating abundance, but also creating vol. Now, credit spreads at the moment, we've already talked about, they haven't spiked up. I checked them again on the weekend, and I found them to be relatively similar to this. We haven't really seen the bonds market, that is the debt market, freak out just yet. And this earnings season has almost been foreshadowed by everything else because, of course, guys, we've seen huge moves through so many different stocks and particularly materials and metals and all these types of things, which has kind of made it so that we focus less on earnings. But so far, earnings has been, I would say, decent. I wouldn't say amazing, I'd say decent. And it's still keeping this market up. And remember, if earnings goes bad, we expect a dip, then we expect usually a bid, and then we start to put the big question mark out there. These are the big names coming out this week. Here are the options flow levels, of course, earnings whispers and watcher here. So options movements expected to be pretty big for things like Datadog, Shop. Be careful, they're 15% plus or minus moves. But I thought I wanted to just quickly discuss here some of the big transactions we started seeing come through. And one of them, probably notably, is probably the most well-known bank, which is JP Morgan. And we continue to see what could be distribution on the banks. And again, if we see the banks break down, especially through this level, guys, make sure you have alerts there just underneath, what is that, about 290. This level here is going to be super significant because if we break below there and we've got this many transactions up here, it could show us distribution and it could show us a weakness in the financial sector. Remember, where finance goes, often the market goes. So we have to be a little bit scared of finance if it goes bad. What we're not scared of is the market stats read here, which is obviously that the energy sector looks pretty solid and has some good stats behind it. We've kind of seen that, and we'll show it in the charts in a moment. Quarterly EPS is generally up across the board according to Duality. And just remember, for everyone that's looking for massive silver rallies, although we were a huge silver bull, of course, all of last year, well earlier than most people, and gold for years and years and years, I do tend to focus more and prefer gold after what we just saw in silver. Now, I'm sure silver percentage-wise will do some big numbers, but do remember when silver blows off the way it just did, its generalized stat here from Nautilus is mediocre to say the least. Let's now jump into the markets and have a look at what we've got going on. The Magnificent Seven barely held on to support, but it did hold, guys, so it didn't break underneath, which is, of course, positive overall. The S&P saw a big advanced decline line increase, so that, again, shows breadth is pretty solid, and the market held on to that put level just underneath 67, 68. So it just shows, again, heaps and heaps of people trying to short it off. In regards to the futures, you can see here the options levels for the Monday open, and that was a pretty strong rejection. So it means that if we open up, down, and we rally up, well, as you guys know, one of my big reads in a bull market is that's the kind of market that generally things do. They start open bad, and then by the end of the day, they close stronger, which shows bid buying. So yeah, I think overall the close is middling. I don't expect that much from the US 500 this year, which I think we've talked about several times. But what I do think is that it is an abundance mindset of looking at different sectors. Let's now take a look at the puts this week and the calls. Obviously, 7K is still the call wall, so it's going to be hard pressed to get through there. If it does, though, expect further buying, I guess, to commence. And the puts just started to get stacked all over the place. Actually, for the Monday session, we seem to have puts right on around the same price, 69.20, 6900. Lots and lots and lots of puts at that zone. So certainly a very important level to be looked at and focused on. For Tesla, it managed to hold 400, which we know is a huge put level. We lose 400, go to 380. But really at this stage, Tesla's kind of not that interesting because, again, there are so many other stocks in there, but 400 is the put wall at this stage. And IBIT, so this is Bitcoin, we managed to make it back up to 40, which is a very strong level on the puts. So be interesting to see whether it can keep going and keep maybe running here a little bit. At the moment, at the time of this recording, it's just underneath 70K, which would be just underneath 40, I believe, on IBIT. So yeah, very interesting. We'll keep tracking those options levels. And for gold and silver, the main thing here was that the markets would get back up to around 450. And of course, they have on gold. And for silver, you can see here that we're above that 68, 69, 70 zone, which seems to be where most of the negativity was. And again, we showed in the previous video that we had that cross correlation where there were just so many puts that it made sense that we would probably bounce off silver. And do remember, what this whole thing is exposed is the huge amounts of leverage and the huge amounts of manipulation that obviously Wall Street's been doing on that metal. Now let's go and have a look at lead indicators. Do we have any real signs of significant weakness? Well, bonds markets are still not freaking out. And we do have, of course, the market turning a little bit more defensive, which we can see here by XLY, XLP. And funnily enough, that head and shoulders pattern, if you can believe it, is a ratio. Oh, it got stuck there. But what you can see here is that we have basically already completed the overall sell pattern in terms of how much weaker consumer discretionary is to staples. But what this is showing us is that at the American consumer, maybe the unemployment figures, there's something a little bit wrong in these markets. So don't think that 2026 is the same as 25, the same as 24 and 23. We're getting a little long in the tooth. We've hit the average of what the S&P usually does during a bull run. And now it is all about asset selection. Let's move over now to the overall spreads. Are they freaking out? The answer is quite simply no. And 10-year yields and most yields stabilized and went up throughout the Friday session. So again, this is possibly, if we keep seeing yields going up, it could possibly be very good for oil, which of course we've been focused on recently. You can see here US oil bouncing off that key breakout zone, and XOP, which is exploration and production oil stocks, actually broke and closed again above, showing that there is strength through all of the energy sector. And do remember, guys, the energy kind of area just has been skyrocketing. So you can see it here. You will, if you've been watching the videos, you know we've been talking about this for ages. But yeah, it's just been phenomenal stuff here on the, we write the right one in, guys. There we go. On oil services, look at this thing. Wow. And I would guess that we're one of the only communities, and let's give ourselves a clap for this, that even found this that early. So hell yeah, guys. Well done. And it just shows again, look, think outside the box. Don't do what's in the press because it's generally in the price. Let's now move over to some other interesting codes. Again, defensives are beating out tech. We also want to look at our semiconductors markets. which at this stage, semiconductors rebounded. So they're still in an upward trend, holding on to that 50 daily. We'll see how all that goes. Of course, the stock to watch is also going to be Nvidia, which came off 170, which is pretty key because, as you guessed it, guys, if you take that level out, then you've got a nasty head and shoulders on your hand. And that is, of course, coming off the biggest stock in the world. So things could get pretty sick pretty quickly. So, of course, things to watch. Dollar index held itself on that massive trend line we talked about all year so far, and gold managed to spike back up to just underneath 5,000. So it doesn't look, hideous, but it's just stabilizing after what has been pretty big crush. Now, silver did undermine that low, and you can see it came down. Now, we actually kind of felt that silver could hit this level because to stop a freight train, and that's a freight train, takes usually structure. Bulls will, of course, be now looking at a break of 91, and I think that it looks strong, of course, to see these bounces, but I'd also be looking at maybe like an 81.37, like a higher high here, to really show at least any real bid, because at the moment it's still in a downward trend. So you've got to remember that when you're looking at these charts and pay some attention to that. The VIX got crushed. It was a pretty big crush day. There was some statistical analysis, I guess, we could do around that, but in general, I guess, vol is very quick to shake out in this system as well, and Chinese stocks bounce back up off that super little bit of support here that we talked about at 26.7. So look, they still remain kind of in an upward trend into Chinese New Year, which often is a positive time for them. And I think what's most, significant about this market is this type of chart. Magnificent 7 versus SPY. The big tech, it's weakening. Is this a concern about AI and its future? This is not exactly what I would like to see in a market if I was thinking, wow, it's early cycle or mid cycle. This looks kind of bad. So a lot of people will say, oh, don't worry about it. I pay attention to it. I think you guys do too. It's why you watch these vids. So we're watching, and it holds on here, but it just shows that there are different sectors to be in, and obviously you want to be focused in on the right stuff at the moment, guys. Magnificent 7 may have just held, and so did the NASDAQ. Look at that 24,000 here on the NASDAQ. Just held on, which is a pretty big deal. And Bitcoin and MSTR. So let's firstly look at MSTR. MSTR got crushed underneath, just underneath there too. You can see that was a huge hit for it. But really, the main thing here is, of course, Bitcoin. And what we have here is a massive amount of support line, big volume as well, between 62 and 68. And we saw, of course, a liquidation here underneath this level that wiped Bitcoin all the way down into this major level, and then it's bounced up a little bit. Now, if it's true and the US was actually buying this particular asset class, and again, who knows, the main thing here is that we have oversold. We've probably gone the length of what you would expect in terms of a general move. If you take the full distance, let's say from here, and we extrapolate that out, you're going to get a similar kind of flag run as well. So I think that in general, it does make sense to usually support itself here. You can see on the left-hand side the massive amount of structure. Is it out of a bear run yet? No. I mean, look at the 24 hour here, the red one. It's kind of still bouncing off those and selling off. But it's a good first step in the right direction for one of the, I guess, most important asset classes in the world nowadays, because everyone's tracking it with options. And it's barely holding on, guys. And we saw barely hold-ons across pretty much all the cryptos, including Ethereum and others. So we'll continue to watch that one. It is an evolving story. As always, if you enjoyed today's video, please remember to subscribe and smash that like button. Thank you so much for watching this week. And of course, sharing and commenting. I've been reading a lot of comments. There were some excellent comments as well I want to get round to from our last video, which we want to share in the next one. And I do appreciate those guys. One of you literally, I think you wrote a book, and it didn't look like ChatGPT, so I'll give you a clap as well. Thank you very much. If it was ChatGPT, I tell you what, damn, that was some good writing, bro. But either way, you guys are smart, and I can see it, and we've got the best community around, so thank you so much. For summary, because you always like a summary, I think in general, the market held on barely to some important levels. Mag, SPY, well worth watching. Magnificent 7 in general, if it keeps weakening, then that is going to be a concern. But the semiconductors is the new Dow theory, and it's keeping to, I guess, it's still in a bullish trend. So, watch NVIDIA as well. In general, I don't think we saw a freak out in the bonds market. And as we've often said, that usually means we shouldn't be freaking. And I met quite a lot of you last week, at a live event I did, and a lot of you guys said that you really appreciate that kind of balanced information. So what we go with the bear, we go with the bull. Generally, of course, we'll try to be more in the end bullish because you want to be optimistic, but you've got to be aware of both sides, and this is not the same market that we were in for the last couple of years. Be warned, guys, it's going to be a big one.